Are you feeling as optimistic about the trade issues as we stand today?
Not really. You know, as much as the market should focus on Fed speak, you should also discount that this is election speak, right? I mean, President Trump clearly knows his effect on the market. So even as he called, there was also an indictment on the Taiwanese and the Chinese firms. So clearly, this is not a trade issue. It's a more structural issue. And I would be gearing up for probably a volatile session again this month.
It's interesting because you talk about the midterm election factor here, and we also know that President Trump likes to use the markets as a bragging right, if you will. So he wants to encourage voters to get out there and say, look what I've done for the market. So does that suggest that you think things will only get worse then when it comes to the rhetoric from the White House towards China after midterms?
Well, it really depends, right? Because the U.S. is asking for concrete issues from China, and China is not likely to give them. In any case, I don't expect the U.S. to pull any punches after the elections, and they would actually use any option from the Chinese, whether the Chinese is actually using the negotiations to stall any of these structural reforms.
How are you working around these factors, whether it's political noise or the Fed factor, which we'll get into in a minute, as an investor, though, given the terrible month we saw for October?
Well, as you've already said, October was really terrible, and the movements in the market is suggesting that they have priced in a plunge in Chinese activity, and that hasn't happened yet. So clearly what we are seeing is a pullback in confidence, and the Chinese authorities is fighting a confidence shock rather than a real slowdown in economic activity. So I would be looking at whether confidence would go up and merge with fundamentals, or whether the confidence would continue to remain negative.
Given the measures we've heard flagged by Beijing officials already as to what they intend to do with stimulus, other measures to try and support the economy in light of these trade tensions, does that encourage you as an investor? Would you perhaps be saying, okay, this is going to support the economy going forward. This is an opportunity to get into some sectors in China?
Indeed. So what we have seen is that there have been targeted supportive policies which are really meant to put out a stable market and stable economic activity rather than trigger a rebound. But with markets down more than 20%, well, now less than 20%, they were pricing in a meltdown. So any stability would be taken by the market as positive. This is a good time to buy.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.